The content presented today is not directed to any investors or potential investors and does not constitute an offer to sell or a solicitation of an offer to buy any securities. With that out of the way, I can go ahead and introduce our speakers for today. We are joined by Julie Andraous, Managing Partner at Jambar Capital, Madgi Amin, Managing Partner at African Renaissance Partners, and Ovo Emorhokpor, Managing Partner at Beta Ventures. Ovo, why don't you kick things off and introduce yourself to the people here?
Thank you very much, Nas, and thanks for getting my name right.
No problem.
Yeah, so my name is Ovo. I'm a managing partner at Beta Ventures, VC firm out of Lagos, Nigeria. Thank you. Good to meet you all.
Thank you, Ovo. Julie, same question. Can you go ahead and introduce yourself?
Sure. So hi, I'm Julie. I'm the manager of Jambar Capital. Before that, I worked for several years on capital markets in Europe. I'm now based in West Africa and Senegal and have been an angel investor for some time now. I'm very excited to be here today alongside fellow managers. So thank you again for having me on this panel.
You're quite welcome. Lastly, Madgi.
Thank you, Nils, Ovo, Julie. Yes, Madgi Amin, managing partner of African Renaissance Partners. My co-founder is based in Ethiopia, Hanak Asafa, and we focus on the Horn of Africa or East Africa more broadly, particularly Ethiopia, Uganda, Rwanda, and Tanzania.
Okay, and yeah, what inspired you to become a manager? Madgi?
Sure. I've had a long career working on the private sector and working on technology, going back to Central and Eastern Europe and East Asia, Africa. I was based in Ethiopia for a few years, Cairo. And in all of those experiences, I saw the power of the private sector. I saw what countries needed to do in order to grow their economies. And I saw particularly the role of innovators and entrepreneurs, often young, who really saw a different future for their economies and weren't really satisfied with the kind of gaps that they saw out there, whether access to finance, access to clean energy and power, access to better education. These societies were pretty unequal, and the systems, often state-led, weren't really delivering. And I saw that these entrepreneurs had a better idea, but needed to be backed. And in our region, a lot of the venture capital it goes very concentrated, primarily to Kenya. And I saw there was a gap there that given my background, I'd worked at Omidyar, I'd worked at IFC, I'd been a venture partner. And I felt like people that had that experience could really deploy it to be a fund manager and to direct capital to unlock that constraint for those entrepreneurs. So I feel it's a mission to try to leverage venture capital in a region that doesn't get it very much.
No, it's very inspiring. Julie, how did you get started?
Well, for me, it was my angel investing experience in Africa that inspired me. I'm an equity analyst by training, and when I arrived in Senegal, I joined a local business angel network. And as an angel, I got to meet a bunch of driven entrepreneurs with solid ideas and accompany them in their journey. I got to build knowledge in various sectors and take part in an enriching ecosystem composed of people with different backgrounds and ideas, and with whom you can share strategies, and from whom I've learned a lot. And interestingly, and as Madgi just said, African founders are changing the face of the continent by tackling its most meaningful challenges. And I wanted to have the opportunity to help shape the future in a positive way. I wanted to be able to allocate the necessary time to help founders scale their startup and see it grow into something big. So basically, I wanted to be able to have a bigger impact on the startups in terms of capital and time commitment, and do it in a more formal way. So yeah, here we are today.
Great. That's awesome to hear. Ovo, same question. How did you start out?
Yeah, sure. Thanks for that. Thanks for the question. My partner Ike and I, we lived privileged lives. I have to confess. Lived in multiple countries and in private schools and all of that. So we're comfortable in the US, where we met at business school in Wharton. But what we observed on graduation was some of our classmates from Brazil, China, India, they were going back to their countries, and we stayed in touch with them. I would notice a lot of them were going back home to help build their ecosystems. And a lot of this building activity was creating a lot of impacts that we really admired. And this impact came from technology, which was an area that we were already immersed in. Ike, my co-founder, is an engineer. I have a computer engineering background also. So seeing this, we decided to leverage our experiences and apply them to Africa. And we decided to trade our comfortable US lifestyles, move back to Africa, and in Nigeria in particular. So in the last few years after we moved back, we piloted our thesis that VC was a more appropriate investment structure for Africa as opposed to private equity. Very soon after we started piloting our thesis, we were approached by an institutional investor, and that led to the first our Fund 1, and which has been a success so far. So that was my foray into venture capital, and in Africa to be particular. Yeah.
So does it kind of feel like you are giving back to the community by doing what you're doing?
Absolutely, absolutely. You know, I always tell people that always say, "How are you creating impact?" I'm like, you know, everything you can do to create or increase living wages of the average African is a big impact. So when we see our portfolio companies, you know, growing, creating more jobs, and returning more money to us, then, you know, it's very gratifying because, you know, we can see the direct impact in people's lives. At the end of the day, that's what that matters, impacting people's lives.
Yeah, I agree, and that's shared mission we have, and we do have a good number of African managers in the community, and we're doing everything we can to help foster people like you. I want to quickly zoom in on something. So venture capital is maturing right now, right, in Africa. What sectors do you think are being benefited most from VCs showing more interest in the region? Julie, feel free to answer.
Yes. Regarding sectors in Africa, well, fintech remains the #1 funded sector here. Other sectors have experienced strong growth and gained a meaningful share of the equity funding activity. To give you guys a quick snapshot, fintech represents about 39% of total equity funding in 2022 versus 75% the year before. Today, you have clean tech, who's about 18%, e-commerce 13%, health tech and logistic tech both are about 4%. Then you have ed tech 2%, agri-tech and insurtech slightly beneath 2%. So that gives you like a global picture of the different sectors and how they've been funded. Fintech has been disrupting and enhancing the traditional financial services industry, while also making it a priority to build financial inclusion for the African informal economy. So there are still many untapped subsectors in Africa where fintech must grow. And I believe that fintech is key for the growth of the global African tech market, as it will pave the way for other tech sectors to grow, particularly because most tech startups require fintech solutions.
Mm-hmm. Recently, there was news about the central banks of Nigeria and Egypt signing a memorandum of understanding that agrees to set up a Nigeria-Egypt fintech hub. Do you think we're going to see more of these types of collaborations between African nations going forward? And what do you think the impact of something like that will be?
Well, I don't work in either Nigeria or Egypt, but yeah, I would say we're going to see more of that. But really, what I just want to sort of focus on is that the entire region is becoming more receptive to venture. I think what we're seeing is that more countries have understood that innovation is in their interest, and a lot of the policy changes that we're seeing, for example, major digitization efforts in Ethiopia, not only bringing in a second telecom operator and now possibly a third, but also a strategy where now it takes digital payments to pay all government services. You can't even buy gasoline or pay your utilities without a digital wallet or payment mechanism. You've seen policy changes on the structure and the tax treatment in several countries. And I think as VCs, we should do more about it. But nonetheless, I think what we're seeing is, I think, really going to unlock a lot more capital in the future for all VCs. So I think it's not only that kind of collaboration across countries, and we are seeing more alignment in areas such as digital identity, where it's going to be easier to KYC, but also regulations, cross-border payments. There's a lot of progress happening, driven both by funds, by countries, and even by, Smart Africa, UNECA, and African Union, and others.
That's very interesting, and I do want to double click on that for a bit. There's been a lot of talk about banking the unbanked. Can you tell a bit more about the progress that movement has seen in the past few years? And Julie, I know you wanted to say something. Feel free to hop in after Magdi answers.
Oh, on banking the unbanked. Yeah, so in the countries where we're operating, we tend to see very high mobile penetration rates and increasingly smartphone penetration rates from 70 to 80%, but very small banking penetration, typically 20 to 30%. So there's a lot of people who don't have access to formal financial services through banks. But now, as we've seen across Africa, the mobile revolution is really taking off, as you see. And the question then becomes business models to really reach into those populations don't get services. The last deal we did is, I think it's being announced within the next day or two. So I think I can talk about it, but without naming the company. Mm-hmm. They digitize cooperatives, and all of the farmers that produce for those cooperatives, all of them get credit limits based on their production history. They're able to then extend credit without the collateral and other kind of very difficult conditions that banks typically require. And able to reach, now they're growing 20% month on month. A very large number of farmers are now on board. And we're seeing, different variations of those models across the country. And so mobile access plus technology to be able to manage credit risk has been revolutionary in extending access to finance for people who never had a chance to get it before.
It's very interesting. Julie, do you want to share your thoughts on this?
Yeah, I was just going to add, say that definitely this collaboration between Nigeria and Egypt is a step in the right direction, and will definitely pave the way for other collaborations on the continent. And I'm actually particularly thinking of Francophone Africa, where we already have the West African Monetary and Economic Union since, I think, 1994, with 8 member states offering harmonized and integrated economic space using the same currency. So hopefully we can also see something there soon. And yeah, the impact is of those type of collaborations are huge, as Madgi said, on banking the unbanked population, but also on the entrepreneur side is giving them access to a bigger market and drive the industry forward. Yeah, basically, passporting solution will definitely minimize the legal and regulatory barriers. So that's going to be quite important.
So you mentioned barriers. Are there what are the main barriers to starting a VC fund in Africa, and how do you overcome them, Ovo?
Thanks, Niall. So from my experience so far, some of the major barriers to starting a VC fund in Africa include understanding the regulatory landscape and funding constraints, definitely, and then market fragmentation. We have over 50 countries in Africa, so understanding that is very, very important. And I think the last but not the least is poor infrastructure. So on the regulatory hurdle, so you have to think about the type and the size of the fund that you might be thinking about, because these determine the type of licensing and registration requirements, as well as compliance and reporting obligations in different African jurisdictions. So I'll give you an example. So for example, asset managers and alternative fund managers in South Africa need to obtain a financial service provider license from the FSB, which is Financial Services Board. Then foreign funds that also want to market in South Africa also need to register as foreign collective investment schemes, under the what they call the Collective Investment Scheme Control Act. That is a regulatory mandate that you have to satisfy in South Africa, which does not apply in the other 50 plus African countries. Each of them have different types of regulatory red tape. So you have to be very, very conscious of those that aspect about setting up your fund domiciled in an African country. And then you come to the funding constraints. Raising capital for Africa it is difficult, especially for new entrants without a track record or reputation. So equity LPs, investors might perceive African funds as risky. They're uncertain about all kinds of risk, political, forex risk. So they demand higher returns, or more control. So you have to be conscious of that as you think about setting up your fund. And then the market fragmentation is it's something you have to also be very conscious about. So Africa is large. It's a very diverse heterogeneous continent, with different economic, political, social, and cultural characteristics across countries, and even within countries, So that means as a fund, that you want to operate in one market, it may not be easy to replicate your strategy in that market or in one region into another market or region in Africa. So a fund that also wants to expand its reach or diversify its portfolio, we need to conduct very, very deep, extensive research and due diligence to establish, local partnerships and networks that will help navigate some of these complex legal, tax, and idiosyncratic aspect of new markets in Africa. That has been my approach to building a venture firm in Africa, relying on local partnerships.
Madgi, how do you try to overcome some of these barriers in what you're doing?
Yeah, I really agree with Ovo, that especially in the last point, that the perception of risk is really a barrier for those who want to invest in Africa. And I think also the point that you really do need local presence and local knowledge to be able to surface and manage these risks. So for us, we, having half of our team based in the continent Ethiopia and others based elsewhere, one in Egypt right now, we really rely on understanding. There are risks. There are political risks, there's governance risks. So some of the practices that we've seen on the continent still need to evolve. And so one of the most important things we need to do as fund managers when we work with companies is to work with them on mitigating those risks, help them structure properly from a governance standpoint, understand those markets very carefully. The ecosystems are fragmented. You have to play different roles sometimes. Sometimes you're trying to understand the sector and its evolution. Sometimes you're working on the firm itself, trying to build. It's not really just invest and walk away. You have to stay committed and stay involved, working with them as they grow. And the other, big risk perception is on exits. So you always have to bear in mind that in Africa, a lot of the exits are strategic.
Okay.
If you're in markets that are attractive to others, those companies may be acquisition targets later, or they may, if you're a seed stage investor, you may be exiting later on in A or B rounds. But really, you have to keep those options and keep making sure that your company is attractive later for either attracting more capital or perhaps looking at strategic partnerships. So I would, that's in terms of managing some of the big risks. There also, in some cases, it's important to re-domicile some of the companies to places, jurisdictions that are comfortable for investors.
Right.
As a fund manager, your client is LPs. So you need to listen very carefully about the risk appetite, the combination of risk, return, and impact that those LPs are looking for, and making sure not only that as a fund manager you're behaving accordingly and delivering for them, but also that you're transmitting that knowledge to your founders, who then ultimately are creating impact in the country, but they're also creating return and impact for LPs. So I guess that's in a nutshell how I would think about that question.
Oh, that's a very comprehensive answer. And we have one more audience question about risk, a type of risk that hasn't really been brought up so far. So yeah, all of you have mentioned that, Africa, it consists of a lot of different countries, a lot of different jurisdictions, and also a lot of different currencies. So Tandeka is asking, how are you mitigating foreign currency risk with portfolio companies earning revenues in local currency? Madgi, I don't know if you want to keep weighing in on this.
Yeah, no, so, so for us, that is a consideration. And so far, all of the companies, all of the investments that we've made, including the ones that we're very close to making in our pipeline, are domiciled in liquid countries, whether it be the U.S., Delaware, Netherlands, or other, Mauritius, other places that you don't bear the currency risk on the capital events, the investments in or exits, but the operations themselves are generating local currency. And so you need to watch how the countries are managing. And many countries in Africa, because of higher food prices and higher energy prices, the COVID, have some currency pressures. So you need to monitor how that's affecting operations on the ground, but also make sure that you're managing in terms of where the capital events would happen and what currency they're happening in. So we're not taking currency risk on the capital events, but we have to focus on how the companies are operating and how they're managing to access currency.
Okay, that's interesting. Julie, do you have any ways of mitigating this, or how do you think about this?
Well, we did the exact same thing. We only invest in startups that are going to have their holding companies in a jurisdiction in which our LPs felt comfortable in. So either the US or Europe, And as Magdi just said, we don't have risk on capital, and then you just have to monitor on the operation side. But going back to the barriers to entry, when they were talking about fundraising, I think Ovo mentioned that. I think to overcome that, communication is quite key. It's important to educate about the market and be able to change mentalities. And I'm talking mainly about trying to raise funds from local players. For us, we have more LPs coming from Europe or the US. And the thing is that today there is way more data for Africa than back in 2015, right? I mean, Africa now has unicorns, IPOs, mega deals, and people need to know about that.
Yeah, there's a lot more to get people excited about, I guess. And yeah, in general, like, how do you get your LPs excited for the opportunities that are starting to emerge in Africa? Like, does the data help?
Yeah, for sure. 100%. We talk about the market and its evolution. I mean, it's VC in Africa is still a young market, right? Sky is still the limit. But the growth has been exceptional. And it's very exciting to be part of a growing and blossoming ecosystem that gives you a sneak peek into the future of Africa.
Amazing. This ties into an audience question we have for Ovo, which is, why did you decide venture capital was a better way to invest in Africa than private equity? And how do you see this evolving in the next decade?
Thanks for that question. So my wife was in private equity prior to me starting my venture firm, and we had a lot of discussions, and I saw firsthand how difficult the private equity firms in Africa were struggling to really make headwinds in Africa, and my observations at the time was that there were not enough, the pipeline of investable companies in Africa. When I say investable, that means, strong multi-country operations with good corporate governance, all of that. I also observed that the pipeline wasn't that deep in Africa. We still had a lot of family-owned one-man businesses doing very well, but they were not investable for PE funds. And then came the advent of more affordable technology, smartphones, data packages, API connections. And all of a sudden, it became much, much cheaper to build a solution, a fintech solution, that can start generating revenues in your first month of operation.
So would you say the rise of venture in Africa is highly correlated with the rise of like mobile devices and mobile technology?
Absolutely, yes. That was one of the catalysts for the rise of venture in Africa. The large-scale affordability of smartphones, and also let's not forget the role that the likes of Y Combinator played in Africa, in shining a light on innovative companies growing out of Africa, which then spurred the attraction of investment dollars into the continent. So for me, looking at all of those things, I just felt like VC was the right asset class for me to play in. And prior to that, also, I'd actually been an angel investor in the US, and I'd also been an entrepreneur. So I understand, the concept of working from idea stage to your MVP, to generating your first revenue dollar or naira, as my case was, satisfying customers, and take it from there. So that's what I understood. That's what I believed. That's what I observed. And the time was right for, I felt the time was right for VC in Africa. And the ecosystem, since then, the ecosystem has really grown and is still growing. And I am still firmly of the opinion that VC will do very well in Africa.
That's very interesting. Julie, you also mentioned having angel investing. How has that helped you in developing like your current vision?
So my angel investing, we're focusing on Francophone Africa. And we're focusing on startups that have a positive social impact on the African economies, its communities. And this definitely allowed me to see the potential and the differences between Francophone Africa and Anglophone Africa. Back then, there was a bigger gap between the two. And over time, the gap has reduced a lot, and we're seeing teams that are more and more prepared because we're having more and more incubators and accelerators in Francophone Africa, which definitely makes a difference, an amazing difference.
I see. Speaking of accelerators, you all went through the VC Lab program. What would you say was like the key takeaway you got from going through our program? Julie?
Well, to sum it up, set your priorities right. Focus on building your LP funnel. That was for me like the main headline. And make as much calls as you can. Don't waste time, and learn to understand when it's a no. And for us, honestly, being with the accelerator was game changer. Definitely would allowed us not to make mistakes, and allowed us to make sure that we're not wasting time.
Very interesting. Madgi, same question for you. What were some key takeaways and learnings from the program?
Yeah, and I agree with Julie. I think it really is a structured process. It allows you to get organized and get focused. VC Lab didn't determine the content. We had a very clear view as to what we wanted to do in the region. We had a vision of trying to bring capital to underserved markets. And particularly very fast growing markets that weren't getting, and we just, how do you translate that growth down to venture opportunity? And our partners shared that vision. But VC Lab helped translate that into a thesis, a team, our model, our strategy for fundraising, tools for managing LP outreach and funnel, and later on support for formation, LP signatures, capital calls, and even investing. So basically, I would say that process provided structure and sound advice, even feedback on how I'm pitching and that side of it. But the team has to do the work. I mean, there's no shortcuts in terms of doing the hard work of going out and speaking to investors. And yeah, there's a bit of it's a process, and there's so certainly it's not going to be for everybody, especially when you're trying to go into a frontier region. But that structure allows you to keep going and just continue to get refueled and re-excited by seeing these entrepreneurs and what they're doing, the kind of impact that you're having. That's your why. That's what keeps you going. But you can't go without structure and organization. And I think that's really what the process provided.
Okay. I'm glad we were able to help provide you with that. Overall,
I think I really have to echo what Madgi and Julie said on the VC Lab experience, especially providing us, the structure and the processes to build enduring venture capital firms, not just the funds now. Prior to VC Lab, I used to think about funds, but now, I think I'm prepared, to build a venture capital firm, an enduring venture capital firm in Africa. And that's one of the core benefits I've had from the VC Lab affiliation. The other thing that I really need to touch upon is what a lot of people looking at fund management might not be, thinking about at the forefront, which is the back end work that goes into running a fund.
Right.
VC Lab has really, VC Lab and the partner firms are really provided us with tools and resources to make that non-sexy but very essential part of fund management easier to run.
Well, thank you so much. I hope, we can continue to provide value for you all. Let's move on to some audience questions. We have a question from Tapiwa for the whole panel. How have you been able to get a reliable deal flow of high potential African startups? Julie, let's start with you maybe.
Yeah, sure. So different ways. They can reach to us directly. We have referrals on the continent. We work with a lot of accelerators and incubators. We participate in rounds where we see startups pitching. That helps a lot to meet the founders very early stage on and allow us to follow them over the years for when they are in our target zone. We know exactly how they've handled their business, how they've arrived there, what challenges they had to face, and how did they meet the expectations. So those elements for us are quite important.
Amazing. Madgi, same question for you. How do you go about securing reliable deal flow?
Well, so first of all, it's essential to have local presence and to either be in the markets or to very, very close relationships with people in those markets. And it's also uses a VC, good ecosystems in VC know that you can't do it alone. You need not only a team, but you need a network. You need people who refer deals to you and you refer deals to them. It's a space where, I mean, to some extent you might be competing for LP capital, but if you win and you help build that ecosystem, everybody wins. So it is very much a positive sum game. And so you have to be generous with your ideas and your referrals, your time, and build your reputation. High integrity is super important, so that people are comfortable with you and the companies seek you out if you treat them well and with integrity. That doesn't mean saying yes easily. You have to have a solid review and due diligence process. But referring to others, it's very often the case that we would have to bring other capital into a deal that we'd like to do. Right. Or we may join others. And then oftentimes those deals are referred by other VCs or people who come on and seek us directly. My co-founder is very well connected, and our LPs our first LPs are all business people from the region themselves, and they also refer deals to us. So I just sort of double click on just being part of a network that's open to referring to others as well as they refer to you.
So it's very much like a rising tide lifts all boats type of scenario for you. Ovo, do you experience the same thing, or how do you?
Yeah. So from my experience, it definitely mirrors that of Madgi and Julie, building that network. And building a network involves giving into that network. You have to give. I do that a lot. My partner also does that a lot at Better Ventures, making introductions to other VC managers. I think we've even helped some of them do some light due diligence on companies they're looking at, even though we're not going to invest in them. Julie, I believe you you guys asked us to check out a company for you, and we did some light DD for you. For Julie, there's a deal that Julie was looking at, which we did some light DD on for them. So that's on the VC networks. What we also do is for our founders, because we are activist investors, our founders are also very happy to refer other founders within your networks to us. I guess because they're happy with the help they get from us besides the capital. That goes a long way. And they're also very good at nurturing relationships. So for example, I might meet a head of engineering or head of sales at a company, and we've done this, I've done this sometimes, where I'm so impressed by the individual. And I just say, look, let's just keep in touch. And if you ever decide you want to break out to start a company, let's have coffee, let's talk.
Okay. Nice. So yeah, it's about identifying any type of opportunity.
Exactly.
And
exactly.
It's great to hear that there's a lot of collaboration, like even inter VC lab funds. That's awesome to hear. We have about 10 minutes left. Just quickly putting everyone's links in the chat again. If you want to connect with any of our speakers on LinkedIn, please find their links in the chat. We will be doing some more audience questions before we wrap. And our next question is from Ashir Rahman, who is asking, during your fundraising process in Africa, what challenges did you incur from LPs or high network individuals outside of Africa? And how do you navigate those obstacles to secure funding? Ovo, I see that you're very excited to answer this one. So go ahead and go for it, let me say.
From my experience, it seems a lot of times the biggest challenge, the biggest headwind you're facing when talking to foreign investors outside of Africa is the impression they've built up about Africa from maybe National Geography or just the news. I know some LPs didn't even believe some of the companies that we have invested in, that they were from Africa, because the engineering was so high tech. They're like, no, so there's that barrier, that understanding, that familiarity. You want your potential LP investor in the West to overcome, the question that becomes, do you want to be the one to help them overcome that barrier, or do you want to just move on to another investor that has already overcome that barrier and understands that Africa has a lot more than what the media has dished out? Yeah, I think the biggest challenge I've seen talking to people is that image that they have about Africa. If that is not present, then the conversations are normally very straightforward and easy.
I see. Madgi, same question for you. How do you navigate challenges with high network individuals and LPs from outside of Africa?
Well, we started late last year and started focusing on structure and funds. So we had our first close earlier this year, and most of the LPs first were people that we knew from our own networks, and then gradually expand the circle to those who are familiar with the areas, the countries that we focus on, and then those who may have had experience taking a bit of risk or have worked on or invested in other emerging markets or within Africa and are ready to look at fast growth countries that are not on the sort of, usual list of destinations for VC. So trying to expand that pool, and you're starting to see that in Africa. really, like any LP, high net worth individuals they have preferences. They may have a sector affiliation. They may have a certain risk impact. They may be more driven by the impact, by the story. Just have to really understand the LP and cater to them, cater to that interest, because I've done a lot of things in my career, but I'm not selling me. It's not a consulting firm. I'm selling our team and our ability to identify, support, structure the deal, and exit as profitably and as impactfully as possible for them. So you really need to show them what you're going to do. It's not only you, but what you do. And so really to also show evidence and examples of that as much as possible. So if you're aligned with them and it's interesting for them, it may take a while. It's just continue the dialogue and continue to feed information to them as you develop, and believe in yourself and believe in the process. Again, that impact that you're looking for should wake you up and drive you every day, and keep reaching out because you want to share that impact with other investors, and you'll get those ones that connect with you and what you're doing.
That's very motivational. Thank you for that, Madgi. Julie, same question for you. How do you convince LPs outside of Africa?
So most of our LPs are outside of Africa. I'd say 95%.
Oh, wow.
So as Madgi just said, the first round of LPs were people who came from our network, who knew the type of work we delivered. And what helped us later on is that we set a frequently asked question Word doc that we used a lot.
Okay.
And we noticed that some same questions keep coming around from these LP prospects, which were, how do you deal with the political risks linked to Africa? In which jurisdictions will the entity who holds the shares be? How do you cope with corruption risks in Africa? So all those concerns they had were pretty much linked to the geography. But then what convinced them is exactly what Madgi said, is the type of work we're going to deliver, the structure we have in finding the startup, running the business and legal due diligence, what is our decision process, and then how do we exit? So that really convinced them.
Interesting. So you prepared for like all of the common, like, okay, these are possible objections.
That was very, very helpful.
Or like, no, we've got this. We're ready for these questions, and that inspires confidence. Okay, final question. We do like to end on this one. It's a classic. We do have to end in like 4 minutes. So answer-wise, maybe try to keep it brief. If you knew what you know today and you were just starting out, like what advice would you tell your past self starting as a new manager? Julie?
I'd say in a very short sentence, apply earlier to VC Lab. 6 months too late. We should have done that 6 months before.
Thank you. Ovo?
I echo Julie. Apply early to VC Lab. It's the lessons I learned there were invaluable, despite having run a previous fund, and never stop fundraising.
Great. I put the application link in the chat. As mentioned, people still have a few days to apply to the next cohort. Madgi, what advice would you give to your past self?
So I think I've shared it mostly, but just to recap it, I would say operate with integrity. B, your product is something that's has to speak to LP demand. There are some that'll trust you right off the bat based on relationship. So treat those LPs well, but most LPs need evidence. So build the evidence base that speaks to them. And then finally, you need a team, a great co-founder, partners, mentors, investment committee that asks good questions. Believe in yourself, believe in the process, and get the job done.
Well, thank you so much, Madgi. I think all of that encompasses a lot and is very valuable to any potential new managers watching this session. This session was great. I want to thank you all for attending and sharing your insights with the audience. Ovo, Julie, Madgi, thank you so much. We hope to do this again.
Thank you for having us, Niels. Thank you.
Thank you so much.
Thank you, and thank the audience. Great questions, and best of luck on the journey. Let's keep rising Africa.
Yes, great. Thank you so much.
Thanks, Julie. Thanks, Madgi.